Joining us now is Cleveland Fed President and voting member Loretta Mester. President Mester, it's great to have you back on the show, especially on a day like today where we saw stocks take a fall on that news. You, like many of your Fed colleagues, have said we need fiscal stimulus. If we don't get it before the election, what's the economic impact?
Well, the timing is less important than actually having a package. I've built a package into my forecast of continued recovery. And certainly, the recovery will continue without it, I think, but it's going to be a much slower recovery. And it's disappointing that we didn't get a package done. There are still a lot of households, a lot of small businesses that really need that kind of help. And even though the recovery has come in somewhat stronger than many of us thought it would, you still have to look at, we're still in a pretty big hole. I mean, there's 11 million people still out of work from where we were in February, and that's a large number of people. So we've only made back half of the jobs. So people are going to be on unemployment. It'll be less than they got in the first package. And I think it's disappointing in the sense that both monetary policy and fiscal policy came in quickly and strongly at the beginning of the pandemic. And those two policies working together, I think, were an important aspect of why, the recovery is we see the pickup in activity. I think the next part of this recovery is going to be even harder in the sense that, we saw the pickup from, very closed down economy. We see a strong pickup, but it's the people who are out of work, who need to retrain, maybe to go into different industries. That's going to take time. Sectors like commercial real estate are still under a lot of pressure, as companies rethink their office plans, given remote work. Those kind of structural changes are going to take time, and having support from both monetary policy and fiscal policy, I think, would make the recovery, broaden it out, and also make it more sustainable. Not to mention, we're not past the virus, and we're still dealing with an uptick in cases in many parts of this country, and in many parts hospitalizations as well. So we're facing a potential second wave, and if we don't get the fiscal stimulus, you know what I'm going to ask? What more can the Fed do? Can the Fed Sarah, I think you
pull out any more bullets to make up for it?
Yeah, I mean, Sarah, you point out a very important aspect of this kind of recession and then the recovery, is that it really is the virus that is the main factor here. This is not like any other kind of recession we've had. And investments in, testing, contact tracing, behavior, if we all do the right behaviors and wearing masks and social distancing, investing in vaccines, those are the things that will make the huge difference in what the recovery is going to look like. You're right, fiscal policy and monetary policy are not in the driver's seat there, but, investment in those kind of things that will speed up the ability to get a good vaccine, to be able to distribute it, and to make sure people are confident enough to take it. Those are the kinds of things that could make a huge difference in this. And you're right to point out that, in fact, both the monetary policy tools, we're applying all we can do. And we've gone in strong. And, as we've said in our September meeting statement, we intend to be there with very accommodating monetary policy, because we think that's what's needed to get us back to full employment or maximum employment and price stability. But it's going to take, fiscal policy, in my opinion, has got to be there. And it's going to be advances in medical treatments and vaccines that will really get us to the other side.
So, President Mester, do you say the Fed's already doing all we can do? There's nothing extra?
Well, I mean, we're going to look at what we can do in addition. But right now, I'm very comfortable with where we are, both on our forward guidance and our asset purchases. We're always looking to see if we can do something different in our programs, those 13.3 emergency lending facilities. And as you know, over time, we have changed some of the terms of them to make them more effective. So, we're always constantly looking at things to see if there's more we can do. But I think our policy came in very aggressively. It's very accommodative, but it's going to take fiscal authorities who can do direct direct payments to households who are really hurting from this, to small businesses who are still very hurting from this, to really make a difference. I think the two in tandem could be hugely impactful, but we're doing our part. I think the fiscal authorities, who were very good in the beginning, coming in with a lot of aid, I think they need to do more now.
Shepard Smith here. Thanks for watching CNBC on YouTube.